Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, we're looking at Facebook. So Facebook had earnings that were due out after the close today, and when I began dissecting this chart, I don't know that it was necessarily the easiest place to recommend a trade, because you did have a weekly squeeze that had fired short. And generally speaking, when I've got a technical signal like this, I'm going to err in favor of being bearish. However, in this case I had and this was more of a personal opinion than anything, but just kind of the thought that maybe the sentiment was a little bit too bearish in this, and I was of the opinion that Facebook would still do well off of earnings. Okay, with all that being said, how can you look at this weekly chart and decide that you want to buy the daily? It won't always work out quite this clean, but I will say that any type of a major 618 retracement is worth keeping an eye on. So we had the bulk of the sell-off in Facebook that came through here. Then you retrace a good portion of that. This is the swing that I'm wanting to measure. Swing low against your swing high, and then basically just noting that if Facebook is going to hold up, this is going to be the level that it needs to see hold. Now, at the same time, as I approached it, I wanted to give myself a little bit of leniency in case it didn't move just straight up. So the core part of this idea, for me, was coming in here and looking at the idea that I thought Facebook would hang out above the 152.5 strike. Now, of course, you could always sell the put credit spread against the 152.5, but I like taking the approach of looking at the unbalanced fly, because what this will do is give you a lot more leniency should prices continue to fall. So this is what I set up into the end of the day today, and when Facebook opens up tomorrow, the difference in this type of a fly versus your standard fly is that this has no upside risk. So I feel pretty confident that having pursued the short 152.5 put, that all of these will expire worthless, and I should be in pretty good shape as we move into Friday. Now, if you look at this idea and you say, okay, yeah, Facebook's had some pretty good results, the thing that I look at in this spot is to say the 50-day moving average is right there. Let's call it 171. And then if you drop down into an intraday chart that shows the extended session data, you can see that we're trading up right into that level exactly. So what I'm thinking of is saying, and I wouldn't do it for this Friday's expiration necessarily, but I would probably go out into next Friday. That's to say you put on the unbalanced fly here, looking for the pop higher. Now as we approach these moving averages, coming in and putting on that same strategy against the 175 where you are selling 3 of the 175 calls, you are buying 1 of the 170s, and then buying 2 of the 180s. This is a trade that I'll be looking at as we get into tomorrow. And that's just to say I was looking for the bounce, and then as you get up into this area, I think this will be a fair enough spot to use as resistance. You can set this 175 to whatever strike you feel comfortable with. If you bump it up a little bit higher, you'll take in less of a credit, but give yourself a higher probability of success. That's the way I'm thinking of Facebook now and into tomorrow, and hopefully that'll help you with some trade ideas around these unbalanced flies. You guys have a great trading day on Thursday, and we'll see you at the next free video.